Welcome back. The market's coming back up very nicely. And today, as always, at 9:40, we speak with the big winner of 2023. And we're putting the focus on MCX. The stock's up. Basically, it's doubled in 2023, 100% plus. We have Rishi Nathany, Chief Business Officer at MCX, joining us to discuss the future prospects of the company. Rishi, good morning. Great to have you with us here. Thank you very much for your time. Exchanges and capital market intermediaries are all the rage. Be it equities, be it commodities, but more equities and commodities. And the hope is your investors are hoping that, some of the magic of the very high P multiples on the equity side will rub off on the commodity side as well. So with that said, tell us, let's just talk about the business. The new software, which has been implemented now, has seen a few cycles of expiry. How is it holding up? Have you noticed any issues at all? Is everything working pretty smoothly? If you can talk to us about what volumes have been like, just the picture there.
Thank you and good morning, and wishing you all a very happy new year ahead. The technology transition has been very smooth, barring a few isolated issues which we have fixed and are also working in fixing. Our trading is absolutely smooth, and the turnover that reflects in the turnover, because go live, when we went live on 16th October with the new technology platform, which is the TCS, with the Deutsche Börse T7, and for the back end with the TCS banks. And the volumes post go live have been in fact higher than what we saw in this current fiscal. So overall, smooth sailing as of now. And I'm sure that going forward, the system will become even more robust and we could add more functionalities and features to it.
So the stabilization has completely happened, and could you quantify? Volumes have been higher.
Yes, so I'll just give you.
But because of the software, or they've just been higher. Seasonality and things like that because of underlying commodities. Sorry.
Yeah. See, software is an enabler. So the volumes, the business is as usual. If the software wasn't working fine, the volumes could have seen a negative impact maybe. But the fact being that everything is smooth, so it is business as usual for us. So if you see in FY 23-24, the overall volume till date has been in futures 20,354 crores, in options 81,220 crores. But if you see the post go live volumes, they have been higher than this. So you have seen 20,094 crores in futures and 87,842 in options. So overall, there has been a growth in turnover pre and post go live.
So, okay, Mr. Nathany, that's obviously on the operational side, how the new software is shaping up. Tell us about tech costs, because from a investor point of view, that has been the big concern, because your tech costs were substantially higher in the second quarter. Now, as the new software settles, and I'm not sure if you're renewing any other contracts of any other nature on software platform technology with 63 Moons, just tell us what's the outlook going ahead. First of all, will there be any renewal of any sort of technology contracts with 63 Moons? And give us a guidance on the tech costs for the rest of FY24.
So, as what I can say is that we have fully migrated to the Deutsche Börse T7 platform with TCS and for the back end with banks. So I do not see any reason why we would renew any other technology contracts. And accordingly, whatever the costs are with TCS are the costs we will have to pay going forward. Whatever we had to pay for the previous technology, we've already paid. So I think it's already behind us.
Okay, so can you just guide on this? Because, I'm just going back and looking at the numbers. In the previous quarter, your software expenses were up 55%. They were at about 135 crores. So purely from a cost standpoint, software, running costs, maintenance costs, etc., what should be the quarterly rate now that you have migrated fully to the TCS platform?
See, again, I will not be able to give you specific numbers, but what I can say is that now costs will stabilize and it will not be any out of normal expenditure on the technology platform.
Okay. You have also applied for approvals and renewals with SEBI for select products. Can you tell us where they stand, which are the products, and when can we hear back from SEBI granting you an approval?
Okay, so See, we always work on various products which we want to launch, and we approach the regulator as and when we are confident that we would want to launch certain products. We also had certain approvals in place, but because there was a gap due to the technology migration, we did not launch it earlier. So we are going for revalidation of certain contracts, and for the others, we will go for approval. So both are being done as and when we see the scope for launching new products. We approach the regulator, and once we get the approvals, we will definitely look at launching them.
Can you tell us which are the products where you're going for revalidation and which are completely new products?
Okay, so completely new products, say for example, electricity futures, and then also mini contracts, say, which we are wanting to launch in, say, copper and nickel. Then you could also see we are launching a new steel TMT bar contract on 15th of January. So the steel TMT rebar contract is something which was required by the market, and we feel that there's a lot of scope in that. The cotton contract, we would look at bringing certain changes as recommended by the PAC, the Product Advisory Committee. And in the bullion contracts, we have certain approvals which we are looking to revalidate.
Okay, so this is all. This is this is the whole list of contracts, or where you're basically waiting for the final approval for launch. For the final.
Yeah. So as I said, So as I said, we already had approvals for certain contracts in place, but because there's a time lapse between the approval and we haven't launched it, so we are going for revalidation of certain contracts, and the others we have applied or are in the process of applying for getting approvals.
So 15th of January, you will launch the steel contract. Anything else you will launch in the fourth quarter?
As of now, it's only the steel contract which we've issued the circular for, and as and when we decide to launch, definitely we'll inform the market.
Some of the others could come in Q1 or 25?
See, I cannot give you exact timelines, but all I can say is that now, since the technology transition is behind us, going forward, we will be focusing on getting new products into the market, new contracts into the market, and focusing more on our business growth.
And just a basic question, for all these, when you launch, there will be the futures contract and there'll be the options contract as well?
So there could be futures, there could be, so for contracts, say for example, steel, where you don't have a futures contract, we'll first launch the futures contract, then basis the regulatory norms of minimum timeline and turnover, then we could look at launching options if we see that kind of, if we qualify, the contract qualifies for that. And where we already have successful futures, we could look at launching options as well.
Okay. So typically there is a gap between you first launch, there's no contract, you launch the futures contract, and then typically what is the gap between when some of these thresholds are met and you can introduce options contracts as well?
So this is normally a year one would look at, while there's no specific timeline for us to have to launch something, but we already have certain contracts. So for example, in options, we have options in gold, silver, crude, natural gas, and 2 base metal contracts. So there are certain other contracts we could look at launching options going forward.
How many products do you have right now where you're in the process of rolling out options for?
No, so as I said, we continue to study the contracts, and as and when we feel that there is some scope, we will definitely look at launching options.
Okay, so let me just put it down to numbers then. You said option turnover is some 81,000 crores, right? Or actually, it moved up to
87,000.
87,000, right? So,
yes.
Yeah. And you introduced options, what, about a year and a half ago, 2 years? When was the sort of rollout?
No. So the options were launched 5 years back, and for a couple of years, we did not see much traction. It
really picked up, yeah.
Last 3 years, we've seen complete growth in options, and the growth has been phenomenal in the last 3 years. For example, in FY 22-23, our options turnover was 34,000 crores, which is now up to 87. So we've more than doubled in a year.
So when does this near 1 lakh crore in options double? What's the broad number? I'm just asking you because you look at what has happened on the equities, right? 10 years ago, it used to be 90% futures, 10% options. It's exactly the reverse now. 90% options and 10% futures. So the growth there, of course, is much faster. So on the option side, I mean, if you can, and that's the great excitement for investors as well, if that were to happen. Can you lay out a roadmap broadly? What's the thinking?
Yeah, okay. So while I'm no astrologer, but 5 years back, our futures volume was almost 100%. And today, our futures volume is roughly 20%. So we are also getting there, like you said, about the equity markets. And we continue to do our work, and it's up to the market to reward us. So we go out, meet people, do awareness, launch good contracts, and do all that is necessary to make sure that business goes on and grows. And then it is up to the market participants to make sure that we get to 1 lakh, 2 lakh, wherever going in the future, wherever we may go.
Without dipping into the science of astrology, Rishi, as you said, what's the growth rate you expect for this segment with the existing option contracts and the new ones that you will introduce? Broadly, roughly, in the ballpark, what should we expect?
I can only tell you what we have grown at, and then it's up to you to understand where we could go going forward. So I gave you numbers from FY 22-23, where our total turnover was 57,500 crores, with 23.5 in futures and 34 in options. Currently, we are doing 20.5 in futures and 81 for the full year. I mean, this current fiscal in options. So the growth path is there in front of you.
Rishi, I know you all have a near monopoly, but your competitor NSE is introducing certain products, commodity derivative contracts. How many products does NSE have which directly competes with you? And have they gained any market share? What are their volumes looking like?
Well, competitors are not here now. They came in 2018 when all the exchanges became stock exchanges and all the exchanges were allowed to do various products. And in the last 5 years, I don't see anyone having got much traction. And in fact, our market share has only grown. So I would rather focus on our business and growing that.
Okay. I thought NSE introduced 13 new commodity derivative contracts on 16th of October 2023. And they had already allowed trading in WTI crude and natural gas futures from May of 23.
Yes, but the other exchanges launched other contracts since 2018. So you have all these contracts running, and there are phases when they bring new contracts or whatever. But as I said, our market share is intact. Our volumes are growing. So I'd rather focus on our business, and make sure that grows.
Is there any risk, as you see it, Rishi? I mean, it's like, the DRHP, you write, risks, potential risks into the future. Again, I'm asking you to not predict the future. Like, for example, I'll tell you, on the equity side, occasionally, because option volumes have exploded to such a great degree, and I think we have the highest options volumes in the world on equities, there's this, at the margin, chatter whether, the regulator will step in and whether, things like that. I mean, to just curb what's happening there. In commodities, options, of course, are in their nascency in that sense, right? They've only picked up in the last 2.5 odd years. But that or any other kind of risks that you see?
Yeah, okay. So let me give you a very important differentiation between equity markets and commodity markets, in that then in equity markets, you would have investors, speculators, traders, etc. But in commodity markets, we have much more than that. We have actual end users, producers, consumers, exporters, importers, all these MSMEs, large corporates. So there is a large number of actual users who use the commodity markets to hedge and manage their price risks. So, risks are always there in everything. Without risk, no business is there which is completely risk-free. But having said that, it is all about risk management. It is all about making sure that the commodity markets, which is very nascent, continues to grow. And I believe that the regulator has always been supporting us and will continue to support, to make sure that India becomes a price maker rather than a price taker. And that could happen only if the domestic commodity derivative markets grow.
Rishi, we'll leave the conversation here for now. Thank you very much for joining in. That's MCX View, one of the big winners of 2023. All the best for 2024.